Welcome back to UGFS Map, where Forex is made easy. And today we'll be talking about introduction to the candlestick chart and pattern. And the first on our list is what are called candlestick charts. Candlestick chart is a popular tool used in technical analysis to predict the future prices movement in financial markets such as stocks, Forex and cryptocurrency. Originating from Japan in the 18th century, these charts are composed of individual candlesticks that present the price action for a specific time period. Now, in the 18th century in Japan, the traders came together to form a method to indicate if their produce or goods are doing well in the market, to signify if they sell well and if they did not sell well, or if they sell high or if they sell low. So they came up with the candlestick pattern, the doji candlestick, butterfly candlestick, and many other. They came up with a pattern to indicate how well the market is performing. So these people, when they came together, so they started using it, and eventually it's moved to the financial market of today. So that is how or when it started or where it originated from. Now, if you take a closer look to the diagram below, the bullish candle and the bearish candle. If you look at the bullish candle, it opens at the bottom and closes at the top. I want you to take note about that. Then the bearish, it opens at the top and closes at the bottom. Now, if you look at those lines on top, they are called shadows or wick. We call them wick. For me, I call them wick, but most traders call them shadows, depending on what they see fit. If you look, the shadows, the high and the low, that's like a structure of the candlestick. You understand? That's the basic candlestick you will see out there in the chart. Now note, candlesticks are technical tools used to display price information for a currency pair over a specific period. It can be a 1 hour time frame candlestick, can be 2 hours, depending on what the candlestick might show to you. Now, moving forward to the body, the rectangular section of the candlestick shows the range between the opening and closing prices. If the closing price is higher than the opening price, the body is usually colored green or white, indicating the bullish sentiment. If the closing price is lower, the body is typically colored red or black, indicating the bearish sentiment. Now, as I earlier stated, I've explained it before, so it's usually red when it comes to the bearish and is green or white when it comes to the bullish. Understand that. Now to the wick or shadow. The lines extending above and below the body representing the highest and lowest prices during the period. The upper wick shows the high while the lower wick shows the low. The shadow or the wick shows the price movage or where the price have moved to. Once you start understanding your charts better, you know what I'm talking about and know what the sticks are all about. Now, what are candlestick pattern? A candlestick pattern is a visual representation of price movements within a specific time frame displayed on a candlestick chart. Each candlestick chart shows 4 key pieces of information: the opening price, the closing price, the highest price, and the lowest price during the period. In Forex, candlesticks are a technical tool used to display price information for a currency pair over a specific period of time. They are a popular component of technical analysis and can help traders quickly interpret price information. What they show: candlestick shows the opening, high and low and closing prices of a currency pair over a specific period. How they look: the white part of the candlestick called the real body, and it indicates whether the closing price was high or lower than the opening price. A filled candlestick, usually black, indicates a closing price lower than the opening price, while a halo or hollow candlestick, usually white, indicates a closing price higher than the opening price. Now, the last but not the least, how they are used. Traders can use candlestick to identify trends and reversal, and to make buy or sell entries. For example, the hammer candlestick pattern is a bullish pattern that indicates that buying pressure increases prices after selling pressure. Now, if you are attentive to my class, I have explained all this earlier on. And to top that up, how they are used. Traders can always use candlestick pattern to identify the trend of the market. Either the market is going on buy or either is going on low, because there are some indicators or tools we can use to make sure we know exactly where the market is heading. So I want you to understand that. Now, how they compare to bar charts. Bar charts and candles charts both shows the open, close and high and low for a period, but they do so in different ways. Bar charts don't have bodies and wicks, and instead use straight lines to notch on either side. Now, bar chart is very different, very different. It has a form of lines those moving up, down, moving. That's all it does. It's not easy to understand the way candlestick chart is being understood, because 90% of traders love using candlestick because that's the best way you can understand where your price is heading to, or the price of the market is heading to. You can indicate that through the candlestick, that's the doji and the rest. You can indicate where it's going, but bar chart doesn't show anything. It's just a straight line moving zigzag. Now, this is a perfect example of a bar chart. It has no candle format or anything. It's just a plain line moving in a zigzag formation. It doesn't have anything to indicate if the price is going up or coming down. That's how it is. Now, this should tell you that this is the reason why 90% of traders uses candlestick pattern or chart, not bar chart. Now, this leads us to type of candlestick patterns. Candlestick patterns are classified into types: single candlestick pattern and multiple candlestick pattern. The predictive nature of candlestick patterns are bullish reversal, bearish reversals, and continuation of the trend. Although it never reverses the trend, but can be considered as an important tool. Single candlestick pattern. Single candlestick pattern are essential tools in technical analysis, providing traders with the insight into potential market reversal or continuation based on a single period's price action. Each pattern is defined by the shape, size, and positioning, candlestick's body, and wicks. Here is a closer look at some of the most common and significant single candlestick pattern. Now, like I earlier stated, there are two types of candle you could find in the chart, or two major categories of candles you can find, which is the bearish candle and the bullish candle. And the bullish candle is green. Bearish candle always appears red. Now, if you can remember what I said, for the bullish candle, the opening is in the bottom, while the closing is at the top. But for the bearish, is a reverse. It's in the reverse. The opening is at the top and the closing is at the bottom. I hope you understand that. Now this takes us to multiple candlestick pattern. These are candlesticks that involve more than one candle, moving in an ascending and descending order. Whenever market pushes price upward or downward, it creates multiple candlesticks, which eventually creates a pattern that evolves into multiple pattern or multiple candlestick patterns, which involves over 2 or more trading days. Now, for my own perspective, it can happen in any given section, either hour, minutes, days, weeks, years, depending on how your trading is going. Now, if you look at the diagram below, bullish engulfing, you can see the trend, you can see the pattern. It created a spinning top, a long hammer, and all that. You can see it goes down, then it created a spinning top, then the reversal took place and goes up. You can see there. Then for the bearish engulfing, you can see the pattern it's created. And as I said earlier, or stated earlier, you can see that they are black and white. That's most prop firm or charts. That's how they appear. The black represent bearish, while the green represents bullish. Note, but some charts or 90% of the chart around the world, it appears red and green. Green, while the black will appear red. That's for that. Hammerhead candle. First of all, I want you to know that we'll be discussing about 4 types of candlestick. And the first on the list is hammerhead candle. It has a small body on the top and a long wick below. The hammerhead is a bullish reversal candle that appears at the end of a downtrend. It shows the strength in a way when a bearish candlestick opens going down. The buyers of the market push the sell trade back to a buy trade, thus creating a reversal. If the sellers in the market push the market down, that's the market is going to their favor. Now the buyers, we have to do the same, like push the trend back to their favor by buying. Once that change wants to occur, it produces this hammerhead candle. You understand? If you look at the diagram below, it produces this hammerhead candle. You see it green. It will create green, then the next candlestick will be very long going up. So that's how the candlestick operates. It happens down, up, in the middle at any given time, and most of the time it doesn't indicate if the market is going on reversal. So I want you to take note of these things. Now, number 2 on the list is hanging man. It is a candlestick like hammerhead candlestick. The difference are it opens only in the top of the bullish trend, and it indicates the buyer's weakness in the market space. Like I earlier stated, the hammerhead opens either at the top, middle, or below, and they all have significant meaning. Most call them the ones at the top hanging man, because most times it shows a reversal. Sometimes it shows the weakness, and once there's weakness in the buyer's trend, that means it must reverse. You understand? Now, the doji candlestick. This is considered as the possible indicator trend of a reversal. A doji candlestick formed during an uptrend. A doji candlestick pattern is a technical analysis information on price charts where the opening and the closing prices are virtually the same, creating a cross-like shape. You understand? Where there's too much pressure in the market, like the market is fighting on which direction it goes, like firms or big companies are fighting for who to take the control of the market. Now, in that spot, there's what is called doji. Like, it shows the pressure of the market. Like, it refuses to go up, it refuses to come down. So once you see this thing, it might likely entail reversal in the market space or in the chart. Lastly, and the least, spinning top candlestick. A spinning top candlestick has a smaller body and a longer and lower wick or shadow. It indicates that the bulls or bears are losing momentum. The candlestick pattern represents indecision about future movement of the assets, which suggests that the buyers or sellers could possibly gain the upper hand. Now, this is the structure of a spinning top. You see where it closes and where it opens for the green candle. You see where it opens and where it closes for the red candle. They have small body and a very long wick. As I said earlier or stated earlier, once there's too much pressure in the market, when the buyers and sellers are fighting over the trend or where the market should go, most times these candlesticks appear, mostly spinning top and doji. Take note about that. And now this brings us to an end of UGFS FOREX program, where FOREX is made easy. And the course outline and topics covered: 1. Introduction to FOREX. 2. Introduction on how to trade FOREX. 3. Introduction on when you can trade FOREX. 4. Introduction to FOREX market structure. 5. Introduction to candlestick pattern. These are the topics that was covered and taught in UGFS FOREX program. And believe me, these are the criteria or the basic foundation for you as a FOREX trader, and this can make you improve in your FOREX trading. If you learn the basics and you focus on how it works, believe me, you will do better in the FOREX space. And if you want to go further as a FOREX trader, you can chat me up. I'm going to add you up in my private group, and I'm going to teach you better and show you my strategy on how I trade and I make my wins.